Hey guys, welcome back to this YouTube channel. Finally, it's middle of May and it's been 2 weeks since we did our last market update of Calgary. And I'm going to release a series of videos to reflect back on the last 2 weeks, how things have changed in the Calgary market, so that if you are either looking to buy, sell, or invest in the Calgary market, you are up to date and not just waiting on the next market report or depending on the last one, which might have outdated information by now. So this is all going to be pretty raw. It's not a very edited video. It goes into all the stats that I collect on the back end, graphs that I monitor on a daily basis to understand where the market's at and help you make a better decision. Of course, there's a lot more to this. And if you're looking for a very specific community or specific property type, feel free to reach out and I'll customize these graphs for you so that you can make a better decision. For now, we will go over an overall summary of the market for each property type, and then also just look at the different quadrants and how they are performing against each other for the last 2 weeks, but also observe trends over the last 2 to 3 months. So without further ado, let's start taking a look at the graphs for detached properties in Calgary. So right over here, you can see I have 4 graphs that I potentially look at. That is the number of price drops happening by date, property selling above or below list price, how long does a property stay on market, so DOM is days on market, and finally we have the sold price versus date, so we observe how the price trends are for the actual sold price on properties. One caveat with this is I have already filtered this out by sold price to less than 1.2 million, because while we can look at absolutely everything in the market, it's not a fair representation of where the affordable part of the market is. So I usually come in here and I will set it to less than equal to 1.2 million. And that gives you a better idea of how majority of the market is performing. Again, 1.2 million is still a stretch as far as affordable parts of the market go, but I think it's a fair amount. And the other thing that I decide is nothing, given that it's a $1.2 million mark for the sold price, anything with more than $100,000 price drop or price increase, I cut out, because again, those are anomalies and manipulate the data overall. For something at $1.2 million, I think 100,000 is a very fair amount of price drop or increase to allow to understand where the main market sentiment is. And apart from these two, right now the stat date is set to 4 months, so going back to 16th of Jan. Now let's talk about how these graphs are performing with these parameters. So as you can see, we had a huge saturation of price drops at the start of the year, right around here, and those weaned out when we entered March and even April. We have seen a few more price drops here towards the start of May, but overall the trend is sort of returning back to zero line. It was, as you can see, the trend line here, the distance between the zero and here is a lot more, and then it's slowly coming back to normal. So as the prices go up, people are willing to pay more money, and then that is also closely reflected with what's happening in the above and below list price. So this is how close people were paying to list price middle of Jan, and as we can see now, we have taken a clear deviation from that, and people are paying significantly more above list price, and not just in frequency but also magnitude. So here, even though people paid above list price, it was significantly lower, around the $50,000-$60,000 mark. But now here, majority of the people are around the $80,000, $100,000 mark. So there's a lot of people paying above list price, significantly above list price. And of course, this also takes into consideration that some properties are severely underlisted, and they do that as a purposeful strategy to try and get bidding wars going. As far as days on market go, you can see the days on market was significantly higher when we were in middle of Jan, when we were in the winter market. Spring hit and our days on market started declining significantly. Ever since middle of April or start of April, we've pretty much started plateauing out. So it's more of a sideways straight line, but still very, very low days on market when you look at the overall. Of course, you have certain properties on here that are even below this line. So we have detached properties mostly is around the 7 business days mark when everything is done and it's taken off the market. As far as sold price goes, each of these sublines is a $50,000 increase. So to zoom in a little bit more, as you can see, it's pretty much gone up from here, not all the way $50,000 increase, but we are nearing that. So it's about a $40,000 increase over the last 4 months on average when you look at the trend line for affordable part of the detached market. And how does this compare when we look at different districts? And this is where these graphs become extremely important, because not only it helps you understand where things are more competitive, but also where better opportunities lie, where the market's cooling down, where you can come in and take advantage of the market. So taking a look at the different districts, let's clear everything and just look at city center to start with. So in city center, you can see the days on market actually has started going back up. The lowest point was in the middle of April, and that is then reflected in the sold price, because as you can see, the sold price basically stagnated around the same time and has just been going sideways since then. And in terms of the people paying above and below list price, also speaks to the same story, because it peaked around here and now we're seeing it start to dip down a little bit. We will see in the next month's update if that continues. Taking a look at another district, let's go to East. So East has seen significant gains over the last year, 2 years actually. And do those gains continue? Actually, they are seeing the same story as City Center. So this one's actually starting to dip down a little bit as far as the overall trend line for sold price goes. And the days on market is also moving sideways. And as far as people paying above and below this price, also moving sideways. And in terms of price drops, we are starting to see more price drops happening. You can see the trend line starting to shift back down. So East might be a place to start finding good opportunities in the upcoming month. How is North performing? As you can see, North is actually pretty strong. The days on market still continues to trend down. They have not hit the sideways point just yet. As far as sold price goes, they did see their peak around here, and then since then almost kind of moving sideways. But as far as the competition level, you can see the buyer sentiment is still very strong. So still a lot of people paying significantly above list price, and that trend just continues to go straight up. And the saturation actually has increased of the number of people paying above list price. It was a little lower in March, mid-March, April. And so now we're seeing that activity pick back up when it comes to North. How about Northeast? As far as Northeast goes, they have actually seen a reverse in trend. So the days on market definitely isn't going up. So properties are staying on market for a longer period of time. As far as the sold price versus stat gate goes, you can see the sold price, it's sort of stagnated or still moving slightly up, but not to the extent that it was before. And as far as people paying above and below this price, not as competitive anymore. Significant drop in the number of people paying above this price. In fact, you can see a bit more saturation over here in the last 15 days of people paying below list price. So the moment things start staying on the market for a long period of time, there's good opportunities there and people try to take advantage of that. As far as price drops go, there's lesser price drops. So probably those properties are still being priced correctly and don't really require the price drops, but they're still staying on the market for longer and buyers are able to take advantage of that. Taking a look at Northwest. So Northwest was always extremely competitive, and you can see the strongest trend lines for Northwest compared to everything else we've seen so far. So the days on market significantly dropping into the very lows, and that then clearly is reflected on the sold price. As you can see, the sold price is still on a very strong upward trend, and they've actually seen the whole $50,000 increase, the highest probably when we look at all other property types. So they've crossed an entire segment over here. So almost a $50,000 increase on the trend line for sold price. And as far as the above and below list price goes, you can see even that is very competitive, heading straight up. High saturation of the number of people paying above list price. And if you are looking for a property in Northwest, you need to try some different strategies. And if you're looking to list, now is still a great time and you're going to get good dollar value for that. Moving on to South. South has also been another market that's pretty competitive, but it looks like they are also seeing a cool down. So as far as people paying above and below list price, that is definitely trending down. And that is reflected slightly here in the days on market. So you can see the properties staying on the market for just a little bit longer. And as far as sold price goes, they also see an upward swing. So we actually saw it moving sideways for the most part for the first 3 months. And over the last 1 month, we are starting to trend a little bit on the upside. In terms of price drops, we are seeing more price drops though. So even though we are seeing a slight swing up, given that the days on market's moving sideways and the price drops are increasing, so that would tell you that either the properties were overpriced, they're being corrected, and then they're being able to find buyers for that, because clearly it's not as competitive when it comes to above and below list price. So eventually the buyers are able to take it off market once you rectify it closer to what the real market value is. After South, looking at Southeast. So Southeast should be interesting. As you can see here, still pretty competitive, starting to trend sideways in terms of above and below list price. And as far as days on market, we did see a significant drop, and then now we're moving sideways. And the sold price is also seeing a slight bell curve. So we saw a peak maybe in the last 1 month, and that's starting to trend down a little bit. And as far as price drops go, that's just been pretty much a sideways, just price drops everywhere at the same amount for the last 3 to 4 months. It looks like we're getting closer to the zero mark, but nothing significant compared to what we saw in the other quadrants. And finally, looking at West, West is the most expensive, the most high demand. And clearly, as you can see, the trend still continues, still extremely high demand. In fact, their sold price has probably seen the most change that I'm seeing across all quadrants. So as you can see here, not only did they cross one $50,000 segment, but two. So they've seen almost an $80,000 increase. Yeah, they've almost seen an $80,000, $90,000 increase. But again, their peak was somewhere in the last 1 month, towards the end of April. And now during May, this is again where the last market report wouldn't have reflected this. So as you can see, we are already starting to trend down when it comes to May. So overall, I would say the market is definitely cooling down a little bit. And the benchmark trend that we saw shifting away from the very strong month-over-month gains last month, I think it's going to continue in the June report that will come up. But of course, here you get to see that data firsthand. And when you look at above below list price, again, extremely competitive. In no way is it bad, but it's just started trending sideways, and it's not as significantly strong as before. Still hitting about that $100,000 mark for some properties, but for the most part around the 60, 70,000. So the buyer sentiment is still pretty strong. Again, the real estate market is driven by emotions. The value of a property is really how much the buyer is willing to pay. And at the end of the day, you have to understand the buyer and seller sentiment, and these graphs reflect that very well. Something else we're going to look at to better understand the buyer and seller sentiment over the last 4 months is understanding the trends of how many properties actually saw price drops, price increases, and how did they perform after they saw those price drops and increases. So right over here, you can see month 1, month 2, and the dates for each. Month 3 over here, and then month 4 on the bottom right corner. So overall, my analysis of this is the price drops and increases have pretty much been steady overall. However, there have been slow increases in the amount of price drops happening. So especially in the last 3 months. So month 2, you can see it at 13.49%. That then went up to 13.96, and now we are at 14.6. So there is a trend there. It's very slow. So not a alarming rate of price drops, which indicates that sellers are still pricing their properties correctly. But however, there is an increase in people also paying above list price over time. So if we look all the way back from 4 months, above list here is 42%. And then in month 2 was 50%, That then went up to 52%, and now it's at 54%. So 54% of people are paying above list price. For those people who are dropping their price, there is an increase of people also paying above list. So as we can see here, price increase, right? Price drops. So in terms of price drops, the amount of people then that paid above this price, 11.56, that dropped to 8.9. But then now that has seen an increase to 10.898 in month 3. And then finally 17.71%. So that's a significant increase amount of people paying above this price for the properties that saw price drops. And considering that there has not been a significant increase in the amount of properties that saw price drops, this is a huge section of that. So it does definitely mark a trend. And as far as for properties that had no change in price, even they saw a steady increase in people paying above this price. So if you look at no change over here, month 1, 48%, then it went to 57%, then we went to 60%, and now we're sitting at 62% of people paying above this price for properties that saw no price change while they were listed. So since people are paying above list overall, and also for properties that are seeing price drops, and also properties that haven't seen any change in price at all, it is a clear trend that overall, as far as the detached market goes, there is still a lot of demand. But again, when we looked at the individual quadrants, you can tell there are shifts, right? So this is an overall data, but it's important to understand based on where you are purchasing the property, how the market sentiment for that, because it's a macro economy, it's a micro economy within each community versus just looking at Calgary overall. So overall, we still remain pretty strong for detached market, steady increase in demand. But are we approaching that greed point? And what is a greed point? You will see these in my other property types. So it is a point where the sellers start getting a bit greedy and overpricing their properties, thinking that they can just take advantage of the buyer sentiment. But as we will see in some of the other property types, buyers are not stupid. You can clearly tell when the buyers start backing off and they just don't feel that the property is worth the price that it's listed. And then you see a significant increase in a trend of price drops happening. And then those properties then sell at list or below list. So it's very interesting to see how the market shifts when you look at very sort of in-depth data like this. And if you like stuff like this and you want to look at more communities specific, so just a quick example, for example, if we came back here and we had only the West selected, we could also then go take a look at specific communities and how they are performing. So if you were looking to purchase a property in, say, Aspen Woods and Coach Hill and Discovery Ridge, for example, you could look at specific trends in that market. Now, of course, you don't want to get too granular because then you're taking things out of context. This has been extremely helpful in understanding market trends and helping me guide my buyers into where they can be best suited for, depending on how the market is and how they can react to that. So hope you found this useful. Again, this is all complete my backend data. This is not public information. So if you would like to sit on a call with me and run through this data, let me know. I'd love to set up that call with you and help you set yourself up for success. And definitely watch my other videos if you are also considering semi-detached, townhouse, or apartments, because each of those market segments will operate very differently and they see the buyer sentiment and seller sentiment shift first before other property types. And sometimes you can even indicate trends, say, for example, in the semi-detached market or townhouse market, and you can see it start carrying it down and maybe detached is the last one to get hit. And so you can be better prepared if you understand the trends overall. Now, if you like this kind of content, definitely make sure you show me your support. Helps me reach more people like you and help more people. And I'll see you guys in the next video. Until next time, take care.